What would Joel do? What's up? What's up? What's up? All right now, my favorite part. 3, 2, 1. Ah. All right, guys. That's my theme music. All right, I promised you guys that we would look at a couple of stocks this weekend. Today is January the 16th, and yesterday the sky was falling and the market crashed about 500 points on the Dow. So we're going to look at a couple of charts. All right, if you don't know how to read charts, you can go to my website at whatwouldjoeldo.com. And I do have a video there that shows you how to read candlestick charts so that you can follow this particular video. So my beginning traders, definitely watch that video first and then you'll have a better understanding of this video. So let's look at what we have here. All right. We're going to be looking at the weekly charts, guys, so that we can look at the stocks over a couple of month period. Right now, we're going to start off with, I'm going to go with some of the stocks that were sent to me by email. So we're going to go over the tech sector right now. And right now, this is Google. This is the ticker symbol for Google. We're looking at the weekly charts. If you're on the Thinkorswim platform, you can go to Style and you can hit daily or intraday to get your charts. But we're going to look at the weekly charts. So each of these candles represent a week. And right now, right around December 28th, the high of Google was about $779. Right now, it looks like we're right around $694. So that's a pretty decent buy. We have a trend line here. So usually stocks will hit trend lines and keep going up in price. Nothing goes straight up. It always stair steps up and it stair steps down. Well, it stair steps up and it takes the elevator down. So we have a nice little trend line here. If we break this trend line, we look like we have support down here at $589. And if we break support here, we should fall right around the $515 mark. Google does have earnings that's coming out. It looks like February the 1st. So hopefully we establish a base before that happens because I'm expecting it to go back up. Long as we stay above this trend line, we're pretty good. All right, let's look at another tech stock. That's Google. Let's look at America's favorite stock, Apple. All right. I know you guys see these arrows. These are scalper arrows. They usually tell me when the bias is up or down. Now, Apple's chart looks pretty bad. All right. Looks like the high of Apple was right around $134 a share sometime in April. We do have red arrows that's showing short. We did form a candle or a triangle or a pennant. And what usually happens is if we break above this pennant, we usually go up, but we fell below it. And that's what happened. The stock fell hard. And it looks like we have support here. The low around August of last year was right around $92. And right now it looks like Apple is around a 95, 96 mark, so it should drop about $4 more, and it looks like we should establish some support right around $92. If we do break through 92, I expect Apple to fall even further. But for now, 92 looks like a good purchase price for Apple, and you have a lot of upside. I know a lot of people that want to short Apple right now, and I don't think really the risk to reward is there. I think all hedge fund managers have been waiting to get back in Apple, including myself because I sold mine. And I'm looking for it to hit here. Looks like earnings are coming out around January 25th. We should hit here. We might bounce around the 92, 110 mark for a while. Once we go above that, we should go right back to the highs. That's my theory. So that's Apple. So that's Google and Apple. Let's look at Amazon. All right. Amazon, one of my favorite stocks as well. Looks like we have a trend line here. Looks like the high was right around 696. Right now, we're at about $570. If you noticed, I have these yellow triangles here are alerts. If you want to set an alert on your chart, you right click on the chart. Well, I'm using a Mac, so you right click. Hold on. You right click. I don't know if it's going to show, and you can. This is create alert is here. I don't think you guys can see it. Let's see if I can do it here. Create alert is here. You create the alert. You can establish if you want it at or above that price. We want it below, and you just set the price here. And you hit the alert, and you can be alerted by. You can actually be alerted by sound or by email. But right now, it looks like Amazon is right around 570. This was the trend line. Looks like trend line support. Looked like we broke that. And it looks like we can fall all the way down to, well, we have support here around the 491, 500 mark. And then again, right around the 450 mark. I think I actually got in Amazon right around the 250 mark. And I sold it around the 650 mark. And I'm looking to purchase more Amazon. Right now, I'm not holding any big tech companies right now. So I really want this to fall down to 450 so I can get back in. All right, so that's Amazon. Let's look at the broad market. If you guys didn't know it or not, you can actually buy the S&P 500 and the Dow Jones. The S&P 500, if you want to buy it in its stock form, or the ETF, you can buy the SPYs, which we call the spiders. And if you want to know what the broad market is doing, the highs were last year in May. And as you can see, we've been falling ever since May. We did try to rally and come back up, but we broke this trend line support, and that's why the sky was falling the last couple of weeks. This was last week. This was the week before. But here's a good thing. Looks like we have strong support right around this 182 mark. So that's about another 5 points. I think that's what it should be, 2%. Another 2% down, 2 or 3% down. We hit here, and we should we should have some capitulation right around this area. Capitulation just means a lot of buying and selling, but not really going higher or lower. And then hopefully, if we get great news because of earnings, we can try to climb back up. If not, let's look at a longer term. We can drop again to about 181. There was support here. There was support here and support here. So that's a triple bottom, which is a good thing. A triple bottom usually means win. Forms the W. If we break this mark, I mean, we really could fall. I mean, we can go back. I mean, this low was back in October 2013. This other low here was back in 2000. Hold up, this says 2014, so this can't be 2000. Okay, that was 2014. And this was 2014. So it looks like we can break down to 173, but I don't see any huge. I mean, I can see about another 10%. 10% will take you right around 18, right around this mark. So another 10% down is not the end of the world. If you notice here, this is volume. The volume was really heavy here. You see these spikes? The higher the spike, the higher the volume. And it looks like the volume was less. So if the volume was greater, then it could drive us further down. But for now, it looks like we're forming a base right around this 182, 180. We feel pretty good right around this level. So I expect the market to probably try to rally and go back up. Because, I mean, before we even go lower, we should come up, test this trend line before we go lower. And, I mean, that's another 10 or 15% up. So that's what the broad market looks like. You can also buy this in stock form, SPY. Let's look at the Dow. We call it the diamonds. The diamonds is forming the same chart. We have a red arrow here. We broke this trend line support, and bam, we are falling. I have an alert here to set that's set for when we get here. Looks like the S&P 500 is closer to the bottom than any other chart. So the Dow is usually made up of the bank, the financial stocks. Although I believe Apple is in there as well. But looks like it has further to fall. So when it gets right around the 150 mark, you can also buy this stock. It's called the Diamonds. Let's look over another stock. Now, I don't usually buy retail stocks, but because the tech stocks were beaten up so much, I decided, hey, let me go ahead and purchase a couple. So I was looking at Under Armour. I love Under Armour. Under Armour just, I mean, they're a really young company. It kind of reminds me of Nike back in the 80s and 90s. They signed Jordan Spieth. If you are a golfer, they signed Cam Newton if you love football. They also have Misty Copeland, the young ballerina that I have a huge crush on. If you don't know who she is, please look her up. We have Stephen Curry. They have Stephen Curry on the roster. So they hired a whole bunch of young guns. So I expect this company to do well in the next 3, 4, 5 years. But I like the chart. Here's the support. Here's support here right around $63.51. The high was $105. And it looks like we're right around the 68. Let's look. Looks like we're around the 68 level. So we only have about $5 to drop, maybe 10% at the most that it can drop before we break this support line. And I expect right now it looks like if it hits this support and it goes sideways for a while, we will break above this trend line eventually, and then the sky is the limit upwards. So I really, really like this chart right now. And I'm trying to get ahead of the arrow forming. And it looks like they're going to have earnings right around January 25th also. So the earnings is either going to send this stock plummeting under support, or it's going to spike really, really hard. And I'm expecting it to spike. I mean, it's already down 40% from the high. So I really love the Under Armour chart. Another retail stock that I was looking at was our favorite, Nike. Nike and Under Armour are competing. So I love to buy stocks that are competing with each other just to diversify my portfolio a little bit. So when I buy Apple, I always buy Google. When I buy Nike, I plan on buying Under Armour. I like, if I'm going to buy Coca-Cola, I will definitely buy Pepsi. But their chart looks really, really, really bad. Looks like it can drop further all the way down to $47 a share. But I expect Under Armour to go up while this is falling. And if Under Armour is going up, I probably won't add to the position, and I'll add more to Nike as it continues to fall. I did not buy a full position, but I do own Nike and I do own Under Armour. But if you notice here, support's right around $47. The low was back in August of last year. August of last year was the low for a lot of stocks, guys. And it looks like we want to test that low just to make sure that we won't go lower. And that's the only way that we're eventually going to go higher. So we did break this channel. A channel is when you have a trend line, 2 trend lines at the high and lows of candles. And usually stocks travel along that channel. We broke below the channel, which is not good, because now if you notice, it's like the channel is supporting the stock. Once it breaks below the channel, it can fall. So it looks like it can fall all the way down to $47. I hope that doesn't happen, but anything is possible in this market right now. All right, let's look at another. I also bought Lululemon thanks to my friend Melanie, who put me on. She's a yoga specialist, and Lululemon specializes in yoga equipment. So this chart is actually pretty funny. Like it's a very funny chart. It broke support here, which if you want to draw support, you just come here, draw a trend line. Can draw a line here. Looks like we can extend it. I just didn't like how that looks, so I just didn't leave it there. But we broke trend here, and we fell really hard, and it kept falling in an orderly manner, and it looked like it tried to form a little bit of support down here at the 43 mark. Now, what's funny about Lululemon is That's not even the high. The high for Lululemon is $82.50, which was made back in, if you look up here for the date, July 3rd, 2013. And Lululemon was actually a stock that was looked to be, they were looking to get taken over by a bigger company. I think Under Armour was actually thinking about purchasing them, and it made the stock. I guess Under Armour wanted the stock to go down. Usually, when bigger companies want to buy smaller companies, they try to push the stock down first so that they can buy it at a lower price because they usually give you stock options in it. But when that didn't happen, it looks like it started rallying back up. And if you notice, a big arrow just popped up. And we're right around the $55 level. So we're right smack dab in the middle. It can go up to 82 or it can come down. It looks like it could come down to about $35. So it can drop a lot. So I'm watching this stock. This is probably the only stock that if we break below this trend line, I will probably sell it because I do own Under Armour and Nike and wait to purchase it again around 36. But I really do love this young company. All right, let's look at another one of my favorite stocks, Tesla, that I own. Tesla right around the $200 mark was always a good buy. Every time it came close to 200, it went up tremendously. So it looks like it came down to around the 180 mark here back in 2015. That was last year of March. Rose all the way up to 286. Dropped again to the 200 mark, rose all the way up to about 271. And I mean, this stock is a pretty volatile stock just because of the company. It's a small company now, but they expect Tesla to be a powerhouse in the future. And the stock right now is about $200 a share, but they're expecting this company to double and triple its money, over the years. This is a high growth car company, and it has all the American backing. If you listen to when the president talks about different companies, listen to the companies that he's talking about. He's always talking about First Solar, and First Solar with and we should have looked at their chart, and he's always mentioning Tesla, and it's because they are all electric built car companies. So it's one of my favorites. I'm heavily invested in it, and I plan to add more if we get down to this 180 mark or we go lower, because I'm holding this stock for my kids. So if it goes up, they make money. If not, it's on them. So if you notice, it does have a red arrow here. We did try to break this pennant, but what I'm expecting to happen is I believe the earnings I guess the earnings were just released in November. So I'm expecting the earnings to come in around February. And what I'm hoping is that we break back up in this channel. And if we stay above this trend line, we should be good. But for now, we broke below it. But we do have support right around the 180 mark. So if you're looking to buy Tesla, 181, 182 looks like a great entry. All right, those are my that was retail. That's my car company. Let's look at Chipotle. This year I decided to get into some restaurant stocks. Why? Because this stock had such negative news behind it. I had to purchase it. Now the high for Chipotle was $758. We are now right around the $475 mark. I think I entered this trade right around the 550 mark. So I am down on this stock, but again, I'm holding this stock long term. And if I can make a 50% return on this stock in the next year or two, then I'm doing okay. We did drop all the way down to about $400. No, actually, we dropped all the way down to $399.14, and it shot up about $76 a share in the matter of a week. So we do have this trend line here, and we do have to break it. Otherwise, we can get here and then fall again, come back and fall again, and that's what it looks like the stock has been doing. We do have support at 352. You can't see it on the chart. I had to go all the way back to 2013. So, I mean, we're almost at the 2013 lows. And I mean, this is a stock where if you've ever been in Chipotle, it's never, I mean, it's always crowded. So I expect in the next 6 months for them to get their stuff together and this stock should start popping back to the upside again. And a lot of hedge funds have been talking about it as being one of their favorite stocks that they're entering in slowly at this particular time. Let's look at a couple of more stocks, and I'm going to have to get out of here. You know what? I haven't mentioned any cannabis stocks. All right, I do have some home run penny stocks that I buy, but I don't like to recommend those to anybody. But if you are trying to get into the cannabis market and you want to know what the big hedge funds are buying, there's really only two that comes to mind. One is GW Pharmaceuticals. And I don't know exactly what they specialize in. I just know that cannabis is one of them. And there's, like I said, there's only two that come to mind, and they are it's a pretty expensive stock. But if you notice, the high of this stock was $133 a share back in June of last year. We are now right around $54 a share. I mean, this stock has been getting crushed. It lost $80 a share, over 50%. And it looks like it can drop all the way down to $41.86. So we're around the 42 level. So we're almost there. Again, the low was 52. We got about 10 more dollars. And if we drop below 42, I mean, this stock can really, these cannabis stocks can go to $0. But this is a large pharmaceutical company. Cannabis is not their main thing. So I think they're getting crushed right now just because they have cannabis attached to their name. But it's definitely a speculative stock. And I didn't load the boat. I do have a small position, and I do plan to add to this position as the year goes. Another smaller company is called, I think it's Insys Therapeutics. And if you look at their chart, it's the same thing. All the cannabis stocks have been getting crushed. Nothing has been up. We did get a green arrow here. I got excited about that, but we couldn't stay above it. I didn't even do the chart for it. Wow. I do own this stock, but it looks like we broke this trend line here, and it looks like we can go. There should be some support right around the $16 level. So I'll be watching this stock. Like I said before, my position is so small, I don't really watch it like I watch the other stocks. It really doesn't affect my portfolio that much. I'm looking for a home run. The high was right around $46 a share. So it's about 50% down. So, you know, I love to buy stocks when they're 50% down. I love to buy anything when it's 50% down. And there's actually one other stock. Wall Street loves this stock. I've never owned it, but I always get questions about it. It's called Celgene. And Celgene is a pretty good stock. The $100 area is where a lot of people love to invest. It's not too expensive and it's not too cheap. But if you notice, we formed a pennant and we broke beneath that pennant, and it looks like earnings are coming out soon. So if it doesn't get above this pennant, then it's gonna fall. Looks like it has support here right around $92. So if you are thinking about buying some biotech companies, this company is not involved in cannabis. This is a legitimate company. I don't know exactly what they do. You can do your research on it. From my understanding, it is a very good, fundamentally sound company. But like any other stock, they're getting crushed. The high was 140. Looks like it's right around 100 level. So it's lost a lot of money, a lot of equity in the company. But there's a lot there to make. I think right now the short is not the best way to go, even though you did break this trend line. But that's me. This is how I'm analyzing charts. I'm expecting it to get back above here. But if you notice, there was high volume here. So that's something that you want to look at. There's high volume here and there's high volume here. So can we get down here? Most definitely. And let's check on one. This is my baller stock. If you're a hot shot and you have money to spend and you want to own, or if you want to buy what Warren Buffett is purchasing, this is his company. It's called Berkshire Hathaway. And yeah, I got trend lines on it as if I own a couple of shares. But this is Berkshire Hathaway. Their stock at the high was $229,000 a share. And the low right now is right around the 190,000 level. And it looks like it doesn't have that far to go down. Looks like it can go down to $184,000. Now, I do own this stock, not the A shares. I own the poor man shares, or hold on, let me pull it up. The frugal shares at $126 a share. You know what? It moves the same exact way. If the other stock is up 20%, this stock is up 20%. So I like to spread out my $192,000. Anyway, that's a joke, by the way. But if you notice, the high was $153 a share. We're down right around 126. Looks like we're right at support. And I own a small position here. I plan to add to it. I love Warren Buffett. I love what he's doing. So that's my video for today. I love the fact that you guys are sending me questions about stocks. You have questions about stocks, and if there's anything you need to know, please go to my website first at whatwouldjoeldo.com. Hopefully, I can answer some of your questions. You can go on Google and YouTube, and any questions you have about the stock market, the answer should be there. But I try to explain the basics of the stock market. You definitely want to put your education in place before you decide to load the boat or throw thousands of dollars at a stock. You definitely want to do what I'm doing. This is what the advanced traders are doing before they buy stock. And all these support and resistance levels and trend line levels is what the big hedge fund managers are using to analyze stocks. So, there are fundamentalists out there and there's technicians. This is the technical side of looking at the stock market. Fundamentals is looking at the PE ratios and how much earnings that the stock is making. And that's all good, but I like to see people that use both sides. And I'm a funda technician. I look at the I like to take fundamentally sound stocks, and I like to use technicals to decide when I would buy the stock and when I would exit the stock. So that's my lesson for today, and I am out.